Hey everybody, well, I'm recording this Tuesday afternoon, anticipating the 6th FOMC comedy show tomorrow, and wanted to thumb through 20 ETFs just to share a few thoughts as we head toward this very important event. We begin with the diamonds. These are in alphabetical order. The diamonds damaged their trend line today for the first time. Thanks to a rally out of nowhere, they closed above the trend line, but the damage was done. First time since the March 15 low this happened. So that's a little bit of a feather in the bearish cap. Here's EWZ, which is looking prospectively like a good short based on this little pattern here. I would need to ultimately get below that pink tint, so I'm jumping the gun here a bit. But as the head and shoulder goes, the right shoulder is lower than the left. As long as it keeps sort of tracking lower, that could well push below the pink and head toward major support there based on that blue line. And of course, backing up even further, you can see it's, I think, fairly vulnerable. GDX, the miners, this has had a bit of a recovery lately, but this major trend line is long since broken. This is a tough one. I'm not touching it. The dollar, the US dollar, might start to really drop in value prospectively, which would help gold. So it's not compelling enough for me. And I would say the exact same thing for the junior miners. I mean, if forced, like where will it be end of this year? I guess probably lower, but I really don't feel strongly about miners right now. Here's the IEFA, and this has been a big fat mess for months now. We had our bearish pattern, our bullish pattern, and this just kind of blob right here, which really isn't doing too much of anything. You could make a bearish argument for it. It's kind of a diamond pattern. In fact, I'll give it a kind of diamond. That's the best I could offer. But it's intruded into both zones here. If you consider this kind of the bearish top zone and this is the bullish base zone, it just keeps meandering. Can't really make up its mind what it's doing. So, which is kind of interesting in itself, but yeah, not touching that one either. Here's the IWM. I've taken a kind of an aggressive trade on this. I've purchased some rather short-dated puts on this. They expire next week. And what I'm looking for, and I'll either have a great day tomorrow or I'll just get blown right out of them. But what I'm looking for is a slip below this Fibonacci support level right here. We've been range bound for almost 2 years now. And what I've got an eye toward is a failure of this Fibonacci. And we haven't done that since way back in May. So yeah, there's that. IYR, real estate, it's really calmed down. It just sort of like gliding ever so slowly above its own Fibonacci. Long term, it still looks pretty bearish, but it's you can see the dynamism right here has just sort of died down to not much of anything at all. Here's the KBE. This is looking pretty good. We had, this is banking. So we had our big bearish top, the big plunge, our smaller bullish base. We pushed right up against it, and now we've been failing below that. And importantly, we have sunk below the horizontal of the bullish base. And in fact, we've just been lingering there for day after day. So that really shows that the bloom is long off that rose. Here's LQD, the corporate bond fund. Looking okay. Range bound now, I would say resistance is right here at 104.91 and a failure of 103.26, as you can see from my slope alert, would be a failure. That'd be a very big deal. MUB, kind of the same idea. We've got this has really died down to almost no activity, but we still have a nice little topping pattern, which if we get below that pink zone would be also pretty big deal. Here's the OEF, which is a mess, but it at least has stayed below this dashed line, which is anchored to this price gap here. You got close to it, was repelled, got close to it, was repelled. Cubes is a little more interesting. In the Cubes instance, we did two good things today from the bearish perspective. One, for the first time all year, we broke this trend line. And two, we managed to sneak below this Fibonacci. So once again, the most hopeful bearish thing I can offer is a move down to this lower range. If things get really squirrely and selling off hard, this whole playground here, I think, is open for entertainment, down to around 348 or thereabouts. SMH, of course, is far and away the most important to me personally. This is, by a huge amount, my biggest position. We're not out of the woods yet, but if we can break 143.35, this thing is going to, I think, be just dynamite. It could also really screw me over tomorrow, but this is the big one. This is my anchor position, to be sure. SPY, SMH we just did. SPY, the spider, we are exactly at the Fibonacci, just resting right there. Next major support is this trend line, which is a ways away. So there's definitely plenty of room to tumble if things get weak. TBT, the ultra short on bonds, strengthening today again. Interest rates are getting higher and higher and higher. And of course, TLT, the bonds themselves, sinking. And this is range bound also. Critical support is the low from way back in October. And we're kind of smack dab in the middle of this range. The upper portion's up here. So this will be very important tomorrow. That is to say Wednesday. I'm recording this, as I said, Tuesday afternoon. Oil just keeps on rocking. That can't be good for anybody except Exxon, or Saudi Arabia more specifically. That is a huge tax on the entire economy. XHB, the home builders, looking pretty frisky there. 7.78. Breaking that would be a BFD. It would be even BFDer if we can break this trend line, right, like so. So this is getting excitingly close. XLE Energy, in spite of oil strength, big bearish engulfing pattern on this today. Just gobbled up all of Monday there. So this is looking quite vulnerable. And finally, our old friend XLU. I have not fallen out of love with this at all. It's just that SMH is bigger now. But XLU, still dynamite diamond pattern. And zooming in nice and tight, we got our shooting star on Friday. And we are, where on earth did this come from? Yeah, more like that. So that's the key resistance point. And then we sunk a little bit yesterday and it's kind of hung out today. We went down a little bit, 0.54%. I'll take it. But what I want to really see is this kind of traverse, like so, into the upper 50s. All right, folks, see you on Wednesday, and good luck to the Bears. Bye-bye.